Carolyn Williams here with Money Reverse. I am here to continue my series of 8 financial goals that every Christian should have. And this is episode 7. And we are going to talk about protection goals. Now, when we talk about protection goals, we're really talking about financial protection. That's my bailiwick. I talk about finances. So one of the goals that we may consider would be protection goals. These are the type of goals that we would set so that we can make adjustments in our lives so that we can mitigate any type of financial disaster. Now, we can't eliminate the financial disaster and we can't protect ourselves from the disaster. But what we can do is we can mitigate it, meaning make it where it's not as disastrous and where it doesn't have as much of a negative effect for us. So let me go to the scripture. A scripture that I will share with you is from the book of Proverbs, chapter 22, and this is verse 3. And it says, "A prudent man sees danger and takes a refuge, but the simple keeps going and pays the penalty." Now, this is the NIV version, which is more of a, how you read it, reading like a book version. But basically, the scripture says, a prudent man will look and make wise decisions based on what may happen in the future, and especially if it's something that may be of a dangerous nature. The simple ignores everything and keeps going, and then they pay the penalty later. And so that is one thing that, now, this is going to be very interesting because with protection goals, for the first time, you're going to hear Money Reverse, Carolyn Williams, say, I don't really have a recommendation for this. Surprise, surprise, because I typically have a recommendation and the Money Reverse formula for this. But this is so personal and intimate because it really depends on your toleration for risk. How can you handle risk? Our risk tolerations are very different, and for some people they say, yeah, I know that's a risk and I'm okay with that. Where another person may not even be able to sleep at night knowing about a potential risk to their finances coming into play. Let me go through a few examples. Some of the things that may be risky to us and affect us in our finances are like an auto accident. So having an auto accident, or things like a job loss. If you had theft, somebody come and steal your auto or steal things in your home. What about a major illness that you would have? You could even have be disabled, whether you're disabled temporarily or disabled for long term. You could also have a natural disaster, a tornado, or a hurricane or flood of any type that may cause, and all of these things may cause an interruption in your finances or cause you to have a lot of financial responsibility, have to come out of a lot of finances to recover from this. And then the last one is death. The death of a breadwinner, especially the breadwinner. And so how would this affect your household, your family? And so what you have to do, know that we all have all of these risks available to us. They could happen to any of us at any time. So with that, when knowing about these financial risks, the biggest way that we mitigate these risks, there's 2 ways. One is with savings, and the second is with insurance. Savings and insurance. So I'm going to kind of go back through those risks again, and I'm going to tell you how you could mitigate some of those. Again, we're talking about protection goals, and these are ways to mitigate any financial losses that would potentially come to you. Hi, Gwen. Thank you so much for joining. So let's go back. With an auto accident, you would have auto insurance for that. Now, interestingly enough, and good, auto insurance is regulated all across the country, so you really don't have a choice. Well, you could have no auto insurance, and unfortunately, hopefully you won't get hit by somebody that is in that scenario. But because of that risk, it's regulated to say that you really need to have auto insurance if you're out there driving. Another one that's coming up that's being regulated is health insurance. So if you had a major illness, health insurance is beginning to be regulated too, meaning everybody needs to mitigate this risk. Because these things, if the risk happens to you, it could be devastating to you financially. And so again, savings and insurance is the way that you mitigate that. So I'm going to talk about some of that now. But again, auto and health insurance are the ones that have some type of regulation, which means they're making them kind of mandatory. You can always skate around it and not have it, but the intention is that everybody mitigates this risk so that the federal government or your locale does not have to withstand the burden of the risk if it comes to you. So another one of those risks is job loss. What if you are the breadwinner in your home loses a job? So with that, the way you mitigate that is with savings. You would say, I want to have X amount of savings set aside to cover 3 to 6 months of my living expenses. I recommend 3 months to start, and then when you can get some debts paid off and have extra savings, and make that 6 months. I'm not going to tell you how much that I had to cover my living expenses. It was quite a bit, several years of savings that I have that would cover my living expenses. So that, again, that's the way you mitigate risk. And just to let you know, I have been out of the workforce. I'm on sabbatical. I've been out of the workforce for almost 2 years. I've not had a paycheck in 2 years. And the way is because I mitigated that with savings. So savings, again, go back to the savings goal. That is a big one. So if you had a theft, someone came in and broke in to get to your car or to your home, that could be a financial turmoil for you. Again, homeowners insurance or renter's insurance is how we mitigate that risk. If you also were disabled, whether it was, now disabled means that you're unable, it doesn't mean that you're bedridden and that you're death-worn. It means that you simply are not able to carry out at least 2 of the 6 activities of daily living. And that's things like eating, transferring yourself from the bed, toileting, maintaining continence, bathing. There's 6 activities of daily living, and anytime you cannot handle 2 of those without assistance, then you're considered somewhat disabled. And it can be a temporary disablement or a long-term disablement. And there's two types of insurance that we would consider for this. Now, I want you to know the difference in these type of insurances. You have long-term disability. Now, what that is, a lot of times it's offered by employers, and it is meant, and what it pays is a percentage of your salary if you happen to go through and be considered disabled. Another type of insurance that may be somewhat confusing is long-term care. So there's long-term disability, LDC, long-term disability, LTD, there you go. And then there's long-term care, LTC. That's a different type of insurance. That is an insurance that would kick in to help to pay if you needed to have a caregiver take care of you, whether it's in your home or whether it's in a facility. So long-term care insurance, don't let anybody sell you that unless you're at least 55 years old, because it only pays a certain amount for a lifetime and only a certain amount per year. So don't pay for that insurance for year over year. Just don't do that. That's a rip right there. Okay, so if we had natural disasters, flood, hurricane, tornado, things like that. With that, we would really look to say, it's very interesting, look at your homeowner's policy and go through the fine details. It doesn't cover everything that you think it does, and most times it will not cover natural disasters. You would need to have what's called flood insurance for that. So that's an opportunity out there to help mitigate the risk of natural disasters. Now, we're still talking about 8 financial goals that every Christian should have. This is episode number 7, and these are protection goals. How do you mitigate yourself from financial risk? Now, the last risk that I want to talk about is death, whether it's your death or the death of the primary breadwinner in your home or the death of a loved one in your home. And there's a couple of things that we need to do. Number 1, make sure that we are prepared for death financially in terms of the immediate things that we have to do to get our loved ones or make sure that we ourselves are buried, and that whole process of last remains. So death is going to happen. Everything else that I mentioned may happen, but we put a lot of money in insuring ourselves for what might happen, but a lot of times we put very little money in preparing for the thing that is going to happen. Death is going to happen. That is not a risk, it's a promise. We're not going to live forever. So we really need to make sure for ourselves and for our families to not be that burden. Set aside some money. Even if you don't plan your funeral, just have some resources set aside so that your family doesn't have to go through raising money to get you buried. I always tell people, get your stuff organized. I do have a safe in my home, and my family knows what to do in case I am single. My family knows what to do in the case of my demise, and I tell them, go to the safe. It's all in the safe. But all of that to say is, so prepare for what you do immediately with those at that time. And then we also need to say, if that person was a primary breadwinner for your household, how are you going to replace that income? And that's what life insurance would do. It would replace the income of someone that has passed away that was a primary breadwinner. So again, protection goals. This is goal number 7. This is how do you mitigate financial risk that may come your way. And there's 2 ways to mitigate, and one is with savings and one is with insurance. Now, Money Reverse, like I said earlier, it's very interesting. Money Reverse does not have a recommendation or a formula or something I'll give you to download to help you with this, because this is so ultimately, and this is so intimate and it's so personal, and it's really based on your risk tolerance. How well can you withstand knowing that you have all of these risks? If you sleep well at night and you're not concerned that there may be a tornado that hits, it ruins your home, or you say, when I look at the cost of mitigating that, and that's not a cost that I can afford, then that's completely fine. I'm going to advise you, don't overinsure though. Do not overinsure. That is a signal that we may be fearful. And so I definitely do not overinsure, because I'm just understanding what the insurance should do and what it should cover, and just make sure that you do what's best for you and for your family. So that's all I have for episode 7, protection goals. This is 8 financial goals that every Christian should have. Thank you for joining me, Velma. Good to see you. Now I'm going to do the final episode of 8 financial goals that every Christian should have. That's going to be tomorrow. I'm going to come on a little bit earlier tomorrow. I'm going to be here at 11 a.m. Central Time. And so we are going to do that final 8 goal that every Christian should have, 8 financial goal that every Christian should have. Now, and then I'm going to do a wrap-up session to go back. I'm going to do that the following day and just pull it all together and give you a downloadable that has all 8 there. And again, I know we cannot absorb 8 financial goals in 1 year. And the reason we're doing this is because it's mid-year, and if you didn't set financial goals, this is a time to do it as you reevaluate where you are. And so now's the time to get some financial goals in your active life, because, you know, like I said, that's me. I talk about money all the time. And both of you ladies here that are, the ladies here that are joining me, you know that, you know me. So, so I'm going to say, I know you can't absorb all 8 in a year. But what I want you to do is go back through all 8 episodes, find 3 of these financial goals that just make your heart pitter-patter to say, I really need to work on that this year. Find 3, but I'm going to say only set the specifics for 3 of what you want to accomplish, but only plan to activate 2. That allows you to have financial goals along with any other goals that you're working on. And the reason that we set goals is for self-improvement. So you should feel good when you're working on your goals. If it's burdensome, if you feel like this isn't helping you, even if it's difficult, you should feel good after you do it. You know, if I go for a hard workout and I feel good afterwards, yeah, was it difficult? Well, yeah, but I felt good afterwards. If you have so many goals that they burden you down, it's counterproductive, and what happens, you'll throw them all away. So don't want you to overburden yourself. And when you know these 8 financial goals, you'll say, this other one I will pick up next year. So that's kind of how I like to work it, and that's what I like to do with my clients. Is we sit down and we go through this goal setting exercise as a part of my money wellness program. And that's where I have personal clients, and they get me one-on-one, and we go through all areas of their finances, including setting these goals, and we write down very specifics and we track, and they get a spending plan system in which they do spend management and have the goals in there as well. So this is a very detailed exercise that I go through with my clients. So I'm going to give you some of that information so that you can have enough to set some financial goals for yourself. And then if you'd like to contact me about becoming a client and having me walk you through your personal money management from soup to nuts all the way through, just like I'm doing in this 8-part series, then I would be more than happy to speak to you about that as well. So if you have any questions, just let me know now. I'll look and see if you have any questions. And if you don't have questions right now, if you're watching this and didn't join me live, post your questions here in the comments. I'm monitoring this. So again, this is timeless information. No, it's never too late to post a question on this subject. It's not like the information's not good, 6 months from now. So definitely just let me know if you have questions, and I will be more than happy to get back with you. Again, Carolyn Williams with Money Reverse, and I have a passion for living, teaching, and coaching sound biblical financial empowerment, and I use the Christian Holy Bible as a guide. Join me tomorrow. It's going to be the final episode 8 of 8 financial goals that every Christian should have. I'm going to be here at 11 a.m. Central Time tomorrow for that 8th session. And then I'll do a follow-up afterwards to kind of pull it all together. So go back, watch the other episodes if you haven't seen them. And then if you have any questions in that final episode, I'll be more than happy to answer them and give you some tools to help you to move forward and set some financial goals. Again, have a great evening, everybody. And until next time.